Good evening and greetings to you all. I know it's been a while since I've actually uploaded a video on the channel, but I'll be making the weekly outlook video, what I'm expecting in the last complete week of the month of April, what I would like to see moving forward, and what I'm expecting in on a few charts that I'm paying attention to. As always, we will start off with the dollar index. I will then proceed to the dollar measures, then eventually to the indices. For those that don't know, for a while now I haven't been looking at the indices because I wanted to see higher time frame displacement out of the chop or the consolidation that's been present for some time now. So we finally got that, and a few other things that I wanted to point out. So we will start off with the dollar index, but before I do that, I just have to mention that YouTube has a new update where the layout is a little bit different. I'm not sure if I'm the only one, because I noticed only a few accounts actually look like this, where we got like recommendations down here and the actual title and everything here on the right side. So I know this is unnecessary, it's not really part of the video itself, but I realized that it makes the habitual position of clicking on the like button, which is usually positioned somewhere here below the video, is no longer there because the like button is all the way here. Of course, not every account has this layout, I just have to mention that, but this is my way of saying that if you do enjoy the video, if you do find value in it in some way, shape or form, if you do like the video, please do not forget to just tap on this little like button on this video, not this one, on this video. Anyway, let's continue. If you've been watching my previous weekly outlook videos, you would know that I was waiting to see if we could sweep this sell side liquidity, because it will be taking us into the yearly fair value gap. Then from there I was expecting an expansion to the upside. For those that need a reminder, this is what the yearly chart of the dollar index looks like. I was wanting us to trade down into this, create the bottom wick or the tail of the yearly candle, then expand higher from there. But of course, as you can see, we have a very tiny tail, and I'm not sure if we would trade back into this fair value gap or not. I still would like to think or believe that we might do that. We might trade into here before pushing up, but again, I'm not really sure. So I'm just going to continue following lower time frame order flow. And right now, from the weekly chart, we had a very clean price action in the last week. Not this current candle week, but the week before, which is this one. Because I was mentioning the fact that, well, to a few people, the fact that we created a fair value gap here from a weekly perspective, but we also made a low that was taken the next week, which is when we tapped into it. Then this week, which is CPI's week if I'm not mistaken, we swept it again. So basically the 3 drives pattern that ICT teaches, where liquidity gets taken 3 times: created, taken, created, taken. So the 3 drives pattern, tapping into this weekly fair value gap that's coupled with the weekly order block, perfectly touching the body of this candle, the opening price of this candle, perfectly touches it, then displaces higher from there without looking back. And then now we have traded into this weekly down close candle, which I pointed out again to some people that might act as a stumbling block, as a resistant area, as a place price might respect and maybe retrace a little bit lower from there. But as we can see, we've actually closed above this so-called stumbling block now. So I'm expecting us to continue higher to this buy side liquidity. Then going through that, we might see that buy side liquidity. For those that need clarity, I mean the swing high residing there and the swing high residing there. So we might see those two. Then of course, going through these two, maybe later on in the year, we might see us trading higher into the remainder of this fair value gap, which is also a complete fair value gap on a higher time frame. So I'm paying attention to these areas. Let's delete the lower one and the consequent encroachment of the monthly fair value gap, and pay attention to the remainder of this weekly fair value gap. So going into next week, seeing that the market has been going from a down close or down range cycle to an up range, down close to an up range, and now we have a small body candle. So I'm expecting next week to also be another small body candle, probably trading into this fair value gap, and then we can expect an expansion out of it, targeting the buy side liquidity residing up there. So this is of course what I'm looking to see, but I would like to see some sort of lower time frame confirmation and SMT divergence before we can take it higher. For those that don't know what an SMT divergence is, I do have a video that I'm probably going to link in the description pointing that out. But I'm expecting us to trade down into this weekly fair value gap, respect it, then continue higher. And I'll be looking for a 4-hour confirmation, since this is a weekly PD array. So let's go down to the daily time frame. Actually, we can look at it with the IPDA data range already outlined. So we can see when the month opened, we traded higher, sweeping the 20 days high by a few pips, traded lower, respecting the 60-day high level, which you can see over there, the 60-day high. We bounced on it a couple times in discount for the month, by the way. Then during CPI, displaced higher, respected the 20 days high, 40 days high, then continued higher into this volume imbalance. For those that don't know what a volume imbalance is, a volume imbalance is basically a space in between candles where we only get the wicks trading. So for example, from that body low, from the low of that candle right there to the body opening price of this candle right here. So this whole space, the purple area, is the volume imbalance. Then the space where there's no trading at all, right here, where there's no wick, there's no body of a candlestick, that's called a liquidity void. So we've now traded into the liquidity void / volume imbalance. I would say just pay attention to the entire volume imbalance, but that's where we're trading now, this highlighted area. So we can see when price touched it, we got some measure of respect and consolidated the entire week. So this is literally the previous week's price action. This is Monday, Tuesday, made the high of week in the volume imbalance, displaced lower, then basically chopped around, and then Friday we just confused ourselves by trading lower, than back to where we started for the day. So we didn't really do much. If I was to measure the range to see where we are likely to look for a bounce off, of course I already mentioned that I'm looking for a tap into the weekly fair value gap, which I can highlight now. Let's do that quickly. So we're looking for a tap into this on a daily time frame. It's going to look something like this, but I was saying that I wanted to measure the range from the previous swing low to the previous swing high, which is over there. So if we are looking at this range, technically, if I wanted the best place to be buying, I would like to buy below the 50%. So technically I'm looking for 100% fill of the weekly fair value gap. So let's see if we can look at the range from a high time frame. From a weekly perspective, this is what it would look like. I would like to see us completely fill this weekly fair value gap for us to displace higher. But of course, we don't have to do that. The market doesn't have to give us that. So we just have to keep monitoring to see what the lower time frame does. We might get price actually do that and tap again on the 20 days high. Who knows, probably come down all the way to the 40 days high before expanding higher. We don't have any crazy high impact news next week. We do have some red folder events, but I don't expect any crazy price movements. But I'm expecting this high and that high. But firstly, we need to fill up this volume imbalance and liquidity void before we can look for a continuation to the upside. So these are my views and what I'm looking for going into next week on the dollar index. Moving on to the next pair that I'm looking at, which is the euro dollar. I'm going to start off with the weekly, actually the monthly perspective. And as we know, price only draws to two things: liquidity and inefficiencies. So we can see last year we got a liquidity sweep up there at the highs. We swept the highs, and now we've swept the lows. We're trading back again to those lows. So I'm expecting a continuation to this monthly fair value gap as our drawn liquidity. I'm just gonna set the alert there quickly, but yeah, I'm expecting us to trade lower, clear the sell side liquidity residing there, the swing low right there, and then eventually the fair value gap residing down there as a buy side imbalance, sell side inefficiency. That's my drawn liquidity longer term. I'm not saying it's gonna get there next week or the week after, but I'm expecting us to draw into this. So going down to the weekly time frame, we can see that we still have our liquidity sweep. We've got an SMT divergence here, which will be clear when looking at GBPUSD. We've got an SMT divergence at the highs, and now we've gotten a displacement. So right now I'm treating this as a weekly market structure shift where we have closed below a significant low. In this case, I believe it's February's low. Yeah, it's the month of February. So we've displaced below a significant low. I'm expecting us to trade back into this weekly fair value gap next week, make the high of week somewhere in there, then continue lower as the typical 2022 model with an SMT at the highs. So that reinforces the trade idea. So I'm expecting something like this, going to the sell side liquidity and eventually the fair value gap down there. So that's what I'm looking to see going into next week. Let's see, going down to the daily time frame, I see that right now we are respecting a fair value gap. We have not violated this daily fair value gap, but that might be the case next week, or we might actually still keep the fair value gap. But in other words, either way, I would still like to see the previous week's high swept, which is this high that was created on Thursday. I would still like to see the high swept, find some sort of SMT between EU, GU, or DXY, and then a continuation to the downside there, trading into sell side. But of course, as I mentioned, if we are measuring, as I've mentioned on the dollar index, if we are measuring the entire range, sorry, wrong tool. If we're measuring the entire range from the swing low to the swing high, pull this out like so, we can see the 50% is basically up here. So if we can somehow trade up into this area, I would prefer that, even though the likelihood of that happening might not be, that might not be possible. But the reason I would prefer that is because we basically have a high. Actually, we got a low here, then a high that was swooped over there, and then we created a new low. So that makes this the ICT breaker to me. The last down close candle before we manipulated higher, then swept liquidity and displaced. So I'm considering this to be the ICT breaker. So this is the only PDRA that I see that's actually above in premium. So if we are really looking for a premium price, we would look for the high of week to be created somewhere inside of this then look for a continuation back down. Before we continue, let's pull up the economic calendar for the week ahead. Looking at the economic calendar here, we have on Monday, we don't have any news. Well, we have this medium impact news. I'm mostly focused on the red folder events. So we got PMI there in different parts of the Eurozone. So I think I'll be paying a lot of attention on Euro on Tuesday. We might possibly create the high of week on Euro dollar on Tuesday. But obviously the other Euro pairs that could be traded, exotic pairs that could be traded. So I won't solely be focusing on Euro dollar. Depends on the one that's giving me the cleanest price action. Then we got GBP PMIs as well on the same day. USD PMI on the same day during the New York session. And then my main focus would be AUD CPI later that night on Tuesday. Going into Wednesday, we don't have anything of interest for me, but I will be looking at the US dollar pairs as well on Wednesday. On Thursday, we also have USD, red folder news, and JPY on Thursday. So nothing crazy, nothing that stands out more, except for this. To me, this will be the only main trading day and session for me in the coming week. But as I said, I don't really see anything that could, except for these PMI numbers, that could probably take us and make the high of week in the 50% of that range on Euro dollar, somewhere up here. But it's actually possible, but yeah, I don't know. So I'm looking to see if we can create the high of week up there. Then this being the drawn liquidity, going through this, we have the monthly fair value gap below us. I'm not gonna drop more lower time frames beyond this. So that's what I'm looking for on Euro USD. The next that we have on our list is GBPUSD. So GBPUSD is actually interesting. Well, firstly, we have a just ignore this for some time. From the monthly perspective, we already tagged the same fair value gap that was created here. We actually tagged this last year, yeah, in February. We reached it already in February, but this to me is still our drawn liquidity. If we want to be more specific, we could consider the unfilled portion of the fair value gap, which is there, and which is now basically the sell side liquidity residing at the swing low right there. But of course, that's a more of a longer term perspective, a longer term target. As for right now, we have this obvious swing low residing here. We are still working through this balance price range where we have a CB residing on the left and a BC residing on the right. So this to me is a huge hurdle for lower prices right now. We need to see in the next 11 days, as that's when this candle will be closing, in the next 11 days, if we would be able to close below the balance price range, because closure below this will give us a stronger indication for lower prices. So that's what I'm looking for on GBPUSD. I already projected us tapping into this fair value gap. If you've missed it, it's on one of my weekly outlook videos where I was mentioning that we got an SMT at the highs, a turtle soup, and I'm expecting an expansion into these fair value gaps, and we got exactly that. So going down to the weekly time frame, we are more bearish on GBPUSD. Well, price got really weak at the last minute, I would say, the last basically 2 to 3 hours of Friday's trading, which gave us this fall off. So GBPUSD might be my top pick for next week in time, or at least I would be looking for an SMT divergence, considering the fact that Euro has a lot of red folder news that could take us into premium, and GBPUSD might struggle to even tap into this fair value gap. But this would be my main focus going into next week. I'll be paying very close attention to this. But I mentioned that GBPUSD is more on my radar for a different reason. Actually, the same goes for Euro, but GBPUSD more, because I wanted to focus more on GBPUSD from this specific date right here, which is why I have a vertical alert set already, which is on the 7th of May. Just something to pay attention to. I'm looking at the 7th of May to really participate on the US dollar measures. Right now, nothing hectic is going on, nothing crazy or that exciting is happening, but this is something that I'm paying close attention to going into next month. For now, we are here, and I'm going to grade the possible market maker sell model being formed right now on GBPUSD. Let's see if we can split this into quarters, making out 25% there. So we can see on the 25% of this entire range from the high over there to the low, projecting that it's probably going to come back down to where the low is right now. We can see at the 25%, this line, we created a high probability fair value gap. It's a tiny fair value gap, but it's right there with an order block. Price tagged into it, displaced lower, did not even bother coming back into this one and continued falling off from there. Did not even bother coming back to this one and continued falling off from there. But going into next week, I would like to see if we can somehow go back into this, then continue lower. If not, then look to your left side, which is the buy side of the curve, and look for what was supporting higher prices. For example, in this case, we can see there was this bullish fair value gap residing there. Price tapped into it and pushed higher. Pull out all these PD arrays that were supporting higher prices and notice how they are now going to start supporting lower prices moving forward. For example, this bullish fair value gap now turns into an inversion fair value gap. If any other block in the past, for example, these series of down closed candles, looking at how price came, tapped it into this fair value gap and then projected higher, we can probably look in the future for a possible respect of this if price can close below it. So the same way price went up, I'm expecting the opposite to happen going down until that sell side liquidity. So even right now, I am not sure if we would be able to tag into this fair value gap, but I would like to see that next week. And then I would like this one to remain open. In other words, I don't even want price to trade up here to fill it or to tap it into it. So that's my expectations on GBPUSD going into next week. The SMTs I've already highlighted were at the highs, where GBP took the high, the buy side liquidity there, and Euro did not take the high. I don't know if I highlighted the correct SMT on the chart when I was showing it, but this is what I was talking about, where GBPUSD took the highs and Euro did not. So I'm expecting us to continue lower from here if price does not just decide to use this as an inversion and continue without tracing, which is a possibility, but that's not what I would like to see. So let's move on to the indices. We will start with the E-mini S&P 500, or ES as it is written here on TradingView. I measured the range already from the last swing low and the potential swing high. I say potential because it's not like this is an official swing high yet. The swing high is described by a high that has a lower high to the left of it and a lower high to the right of it. So we have not even closed this candle yet, and not to speak of the next candle as well. So we would like to see another candle print here, then close. but I still consider the range because on a lower time frame, obviously we've gotten multiple closures. For example, here we've gotten a swing high confirmed up there. So let's just look at this weekly range from a monthly perspective. You can see that when we measured the range to the high, we got this series of down close candles here, which is an order block that was used right there. Price came back to it, tapped it, and shot up from there, month after month after month. So I'm looking for us to trade back at least to the equilibrium of the range. Who knows, we might take out sell side from there or continue to make new highs, but I'm expecting the 50% of the range to be traded to at the bare minimum. So going down to the weekly time frame, certain things that confirmed lower directional bias for me on the indices was now violation of when we were trading higher, any down close candle was supporting higher prices. For example, here, down close candle into a fair value gap supported higher prices. Down close candle supported higher prices. Down close candles supported higher prices. So now we are finally disrespecting these down close candles. We have started printing very bearish candles, like the last 3 weeks consecutively. So one thing that I was paying attention to while we here, actually we'll see on the NASDAQ, but right now, as I already said, the same way that we wanted to see what was supporting price going up, we'd like to see the same happen going down in the opposite direction. So we have this down close candle right here. We'd like to see this now be the one supporting lower prices. So in other words, I would like to see some sort of continuation. Maybe next week create a fair value gap that we're gonna push higher into, then continue low to this sell side liquidity where this other block is, this previous down close candle. So that's what I am expecting. But going down to a daily time frame, we can see that price has just been bearish every single day. We literally just open, trade up, higher above midnight price, then displays lower. Open, high, low, close. Open, high, low, close. Open, high, low, close. Literally every single day from Monday. So this was the entry that I was highlighting on the last time I spoke about the indices. I wanted to see the up close candle support lower prices, and we did that all the way till this sell side liquidity without even creating a move up, because I was expecting us to tag back into this fair value gap before continuing lower, but maybe we'll do that next week, then continue lower. The same way that I'm expecting higher prices on the dollar, I'm expecting lower prices on the indices. So this is my expectations on a mini S&P 500. I'm not going to go on a lower time frame because we can already see how somewhat choppy it was based on this area of price action. We did not create any inefficiencies at all. So there is a chance, if price is actually that volatile, there's a chance that we could trade up into an extreme premium all the way back up there where the previous fair value gap is. Or we could just create a swing low. When we do create a swing low, measure it from the last swing high to the latest swing low, then we could trade up into premium before trading lower. So this might be the area where we turn around unless we create another PDRA somewhere here in basically in discount to continue lower to our target being at that sell side liquidity, or basically the 50% of the weekly range that we just measured at the beginning of the video. Of course, getting there is not going to just be a straight fall off, but we have to take it segment by segment. We started with this sell side liquidity, which we purged, and now we are targeting this one next. So this is our next drawn liquidity. Going through that, we have this sell side liquidity over there, and yeah, then the 50% of the range. So this is what I'm expecting. This is where I'm expecting price to draw to, the 50% of the range on the weekly perspective. I'm not gonna go a lower time frame because of this balanced price range, because price did not leave any inefficiency here, so I'm not going to worry about that. Let's move on to the NASDAQ. On the NASDAQ monthly chart, on the monthly perspective, we have the same sort of situation, well, similar sort of situation going on, where we have a swing low, swing high. Pull this out, make sure it's accurate. Just want to make sure it's there. So we have the same series of down close candles. Of course, in this case, we can clearly see that the 50% is not perfectly aligned with the other block like it was on E-mini S&P 500. So this is something that I'm paying attention to as well, because it's the NASDAQ and we can find that it might get that extreme bearishness while the E-mini S&P 500 lacks on doing exactly that. So this is my drawn liquidity, which is the monthly low of January. We've obviously now traded below the yearly opening price, which is right there, right there, and we're looking to see if we can tag below the yearly low. Going down to the weekly chart, the previous daily candle, which I'm not going to show in this, it's not visible in this time frame, but the previous daily candle on Thursday, we actually traded into this fair value gap, and I wanted to make my weekly outlook video from then, but then I realized that, well, we still had Friday to work through. But the reason I wanted to make it was because we tapped into this fair value gap that was coupled with this other block, and we literally rejected sharply from there. So I was wondering to myself if we are probably going to push higher from there. But now that we have invalidated this bullish fair value gap, we have now closed below this bullish fair value gap, makes me consider it or take it as an inversion fair value gap, and have the possibility in mind that we are likely going to trade down past this down close candle into this sell side liquidity residing below the 50% of the range. So something to keep in mind, the weekly inversion. If this is our market maker sell model and this was our initial consolidation, the swing low right there, then we would obviously be looking for the same thing that I pointed out on GBPUSD, where what was supporting higher prices, like in this case we're supporting higher prices with this fair value gap, could now possibly support lower prices on the sell side of the curve. For example, taking this bullish fair value gap, pull it out in time, notice how we supported prices multiple times until we made a new all-time high. But when you pull it out in time, you notice that price, we closed below it right there, inverted it, and then price came back to retest it and continued lower. We did not even bother trading back into this fair value gap, and that was the last opportunity that we had, because on Tuesday we tapped it, and then since then until Friday right now we've just been closing lower without even bothering trading into any fair value gaps. So right now this is my drawn liquidity, the sell side residing right there below the 50% of the range. And how are we going to get there? I would essentially look for any gaps. For example, here we have a daily fair value gap. We could find price trading up into this daily fair value gap with some SMT at the right time. We might be able to use this as resistance to continue lower, but obviously I would have preferred having a range to work with or a clear structure to work with to take this back down. But ultimately I'm expecting sell side liquidity to be purged on the NASDAQ. On the 4-hour chart, I'm actually going down to the 4-hour chart in this case, but on the 4-hour chart we can clearly see that price action has been fundamentally bearish and technically bearish as well. We see that from Monday we've basically been respecting fair value gaps, and any up close candle was used to support lower prices. Up close candle, lower prices, up close candle, lower prices, up close candles, lower prices. So I expect the same to continue, with the difference being that we might decide to maybe take out this up close candle and then continue lower with some sort of SMT with ES. This is what I'm expecting going into next week. So that's all I have on NASDAQ. Then finally the RUSSEL, which I also trade, Russell 2000. For those that don't know, I've already repeated this before as the granddaddy of all four majors, because we do have the Dow, but I'm not looking at the Dow. I mostly focus on Russell until I find anything interesting happening on the Dow. So Russell did not manage to make a new all-time high, but we did trade higher along with the other indices. Going down to the weekly time frame where the actual structure shift happened, we closed below a weekly swing low as I wanted finally in the previous week. So now, considering this quick rejection up, Russell might actually be the only one to trade higher above the previous week's high. So we might get, now that we've gotten a fair value gap, this fair value gap might actually remain open and never be tapped into, but if we do tap into it, I'm looking for a possibility of a rejection from this high, because it will be a sweep of the previous week's high. Then I'm expecting a 2022 model on a lower time frame to continue lower and ultimately tag this sell side liquidity. And if we measured the range from this high to this low, we have the 50% there as well, but I'm just going to focus on this down close candle right here as the second drawn liquidity, because price may use this to reject for higher prices. So these are my two main DOL going into next week. We do have a fair value gap, so pay attention to that also. Going down to the daily time frame, we can see the rejection and the clarity of it from the daily perspective, but we can also see that the rejection happened only after we swept this sell side liquidity today, being Friday. Well, technically, yeah, still Friday. So after we swept the low, we started displacing higher, but before we did that, we had a very clean price action where when price rejected from this fair value gap and continued lower, unlike the other indices where we had a perfectly balanced price range with no real fair value gap on a daily perspective to work with. So on Russell, I'm expecting us to actually tag into this. The possibility of us tagging into this is high, because we also have the order block residing there, which is this down up close candle. We might tap into the body, the opening price, and then continue lower. But I'm also, my point is that I'm paying attention to Russell probably more than the other two major indices. So that's what I'm looking for going into next week. So for the sake of completion, let's also look at YM, which is the Dow Jones Industrials. We have the monthly time frame, the same order block right there. I don't know if we still need to measure the range, but for the sake of completion, we can measure the range and we'll see that the 50% is round about where the order block is, which is our drawn liquidity from the other two charts. So we got that weekly time frame. We also created a fair value gap on the weekly. This is a very clean 2022 looking model. We swept the highs there. We got a market structure shift there. Sorry, wrong tool. Market structure shift when we closed below that low, and now we have just created a weekly fair value gap with the weekly candle actually closing bullish, unlike the other for the first two majors. So just like Russell, we might get the Dow trading up into this fair value gap, respecting it and then pushing lower. So that's something to pay attention to. We actually closed very bullish Yeah, very bullish unlike the other two. But this also only happened after we took out sell side liquidity. So that's a good sign. So we might see price trading up into this area, maybe come up all the way to this up close candle. Remember what I said about up close candles supporting lower prices in a downtrend. So we might come back all the way up into that down close candle, then being down. That's not really something surprising. That wouldn't be surprising to see us trade up into that, then continue lower. I'm expecting the high of week next week to be on Tuesday, but of course I'm not going to take that blindly. I would like to see an SMT on a 1 hour if I'm really going to be confirming the high or low of week. So I'm expecting lower prices, but probably from here, unless for some reason something happens over the weekend, maybe some war or something like that, then we could find price respecting this volume imbalance and continuing lower. So something to keep in mind. But my ultimate draw on liquidity is the down close candles that we got there on a higher time frame, which is basically this sell side liquidity on a daily chart. That's all I have on the indices. I will make a separate video, and I'll probably link it in the description of this video, where I cover the exotic pairs that I'll be paying attention to. If you have any specific pair you would like me to look at or break down, please do let me know in the comment section below. That's all I have for now. Stay safe, good luck, and good trading.